right, good morning. Good morning to those of you that decided to show up on MLK Day. Nice to have you here. Hope everybody's doing well. Had a great weekend. Hopefully you're warm wherever you are. Most of the country is cold right now. Of course, my brother has to send me shots that it's 60 degrees where he is, so not leaving your house. Yeah, me either. Actually, I probably will in a little bit, but it's pretty outside right now. It's cold, but it's nice. Not a lot of wind, so things are great. Good morning, Miss Cindy. Nice to see you. Good morning, Adriana. I always stay warm. I do not like the cold, but I can tolerate it. I can buy clothes to cover up. That's what everyone always tells me. Like, well, you can bundle up for the cold. Yeah, there's a point where it gets to your bones, though. So let's get going, guys. I'm gonna tell you right now. There's 8 people in the room. That's not enough. That's not enough degrees, Gary. Not a lot of people in the room, right? Everybody here has been here for a while. So what we're gonna do is we're gonna talk about rules again. I'm gonna go through it. Guys, today is the perfect day. I mean, the perfect day for you to ask every question, for you to discuss any scenario that's in your mind, whether it's reading indicators, any questions about Nexgen. Guys, it is a holiday. And I put at the top of the room, and I'll just read what I wrote. And I've got to stress this. I'm not going to tell anyone when to trade. I'm not going to tell you that you should trade, that you shouldn't trade. I'm not going to tell you that today's a good day or a bad day. But holidays do tend to be thin, slow. And guys, I watch people. Andy, that's too cold. I watch people every holiday, and their brain refuses to let them take a day off. Their brain refuses to accept that it's not a normal market. And I watch people blow out accounts, these Apex accounts, all the time. I watch people suffer. They're like, well, I'll trade live money just because, what if I miss out on a day? That one day is going to affect the rest of my life. And I see more bad than good on these really thin days. So today's a great day, and I think Gary put it in the room. Today's a great day to scroll back, to look for patterns. And I dropped that picture in here today, right? So we can just scroll back, look at it historically, and we can start to analyze a little bit. Hey, this is a pattern that I tend to notice. When I've got a bad bottom, especially with no divergence, that mid-band's my first target. And what do these patterns mean to us? And I think that's the second half of what you have to do. It's one thing to recognize the pattern, but you also have to say, well, what does that pattern mean to me? That pattern means to me that, this 50-50 is less likely to work because of the bad bottom. What does it mean to me? It means to me that if I try to go long before the price closes to the large triggers, it's going to be a challenge. So today is a great day to just scroll back and go through, guys. I'm not opposed to ending class early today if there's absolutely nothing going on. But your participation will dictate just how long we're in here today. News. Even when it's a holiday, we're going to check news, guys. And all day, we have medium impact, WEF annual meetings. Have absolutely no idea what that means. So we're going to find out. The WEF annual meetings are held in Davos and attended by central bankers, prime ministers, finance ministers, trade ministers, and business leaders from over 90 countries. Most meetings are open to the press, and officials usually talk with reporters throughout the day. Comments from central bankers and other influential officials can create significant market volatility. Guys, last time we saw an all-day event with news, it was high impact. There were OPEC meetings. And last time we saw an all-day event that was medium impact or high impact, the market was erratic. So again, I can't predict what the market's going to do. I only trade patterns. But if I know that it is medium impact news, there's the chance of volatility all day long. Then you have to be aware, right? And then you also couple that with a holiday. It's a great day for study, guys. Great day for study. The resource example trades, you look and analyze the best of the best trades. Which ones, Gary, are you referring to? I mean, I've got almost 300 here where you could just click on them and talk about them, right? And not every one of these are the best of the best. A lot of these are 50/50s. A lot of these are a little outside. And it's a great idea to go through and analyze what you see and what it means. And are you talking in in Discord? Resources. I don't even know where that is. Gary, you're teaching me this morning. Where is the resources tab? Or is it something that I know that I'm just not even... I'm missing? Resources. I'm looking. Thank you, Gary. Information, right below information, huh? Maybe I didn't scroll up enough. I don't have that. Oddly enough. Oh, maybe I do. Hold on. No, Gary, you have stuff I don't have. That's kind of cool. Maybe I don't have it because I am the resources. I didn't know that was there. I'll have to figure out how I get access to it. That's pretty awesome. Gary paid extra. He's got more channels than I do. So guys, medium impact all day long. WEF annual meetings. It can create a spike or a jump or a bump. It may create consolidation. It may do absolutely nothing at all. But at least you know where it's at. And then everything that we're talking about, guys, anything and everything is right from the education page, right from the tutorial section. You know that there's no secrets. We don't hold anything back. I want to give you everything that you need to be successful with the software. And once again, I don't have any new names in here, guys, so we're going to go through it a little quicker. Maybe. I'm really looking for participation today. What are we looking for? We're looking for odds favorable momentum, right? We're looking for a clear path. Notice that we never got the clear path. We never got the clear path, even with odds favorable. Guys, we're going to look for opportunities in between the areas, essentially. We're going to look for areas to break, and when areas break, we're going to look for opportunities. This one finally made it to the fib, right? But it's been fighting all morning. It's been bouncing up. It's been bouncing down. It's been doing all sorts of stuff this morning that really made trading difficult. Look at the consolidation. And they finally made it to that key area. It's pretty cool when they do that. These fibs are unbelievable, and they make it there more often than not. So we're going to talk about how to catch it, guys, when it's flowing, when it's moving. We're going to talk about what we're looking for, and we're going to talk about it in a high probability trend trade. We're going to talk about a trade where each indicator on every chart agrees for the trade. We're going to talk about strength and triggers today. One of the things that we've been doing a lot for the last couple of weeks is when you guys are posting in the room, one of the most common threads, one of the most common features of your trades I see when you have winners is momentum. We're going to talk about the momentum on the large chart, making sure it's the best. We're going to make sure that there's nothing in the way between you and your targets. And we're going to do it all pretty simple, guys. We're going to do it with a high probability trend trade. High probability trend trade is not only designed to build that foundation to make it so that you can, take a trade that wins more than it loses, to give yourself a little bit of confidence in the beginning. The high probability trend trade turns you into a chart reader. It really does. It gets you to the point to where you can open up your charts, look at your indicators, and understand where the market is likely to continue, where it's likely to go, where it's likely to stop. And these three key elements, guys, are going to drive you through the rest of your trading career. They're going to give you advantages, and they're going to create clarity when you're reading indicators. It's going to have you seeking opportunity. We will, in the high probability trend trade, use the likely to continue spot. That defines your best of the best entry. The BOB, the best of the best. The entry where when everything agrees, when everything is screaming one direction, there's always a little fluctuation. You're going to be able to pinpoint that fluctuation, enter the market, take advantage. You're going to understand eventually where the market is likely to go. The more time you spend reading your indicators, the easier this becomes. And what that does for you is it begins to create these targets at key Fibonacci areas using momentum. It'll not only allow you to hold for longer moves, but it'll keep that little hope out of the back of your brain from trying to hold when the market should no longer go where it's going. And that's where likely to stop comes in. When you reach these areas that we call termination conditions, if it's reached and you're not in a trade, it is an opportunity for you to sit on your hands, to do nothing, to wait for the reaction of the market. If you reach these likely to stop areas, it's a great place to take profits. If you reach these likely to stop areas, it's really just a giant red flag that says, hey, sit on your hands for a second, let's wait. And then the second half of these likely to stop areas, these termination conditions as we call them, is they will behave as an anchor. When a termination condition reverses the market, when it sends everything going the other direction, that's the precursor for the highest probability trend trade that you can take, guys. A termination condition that creates a full reversal creates an advantage the other direction. It has you looking for high volume area trades. It has you looking for momentum style trades, and it sets you up for the high probability trend trade, which is really just the highest probability trade you could take. It's a trade that typically wins 70 to 80% of the time, that creates an awful lot of confidence through the memory of success. And Andy, I saw you said you're going to make flashcards with some looks. I'm going to do you one better. When you make your flashcards, Andy, go to the spreadsheet. And when you see somebody's chart, this is such a great practice to do. Take somebody else's chart and analyze it, right? And create a flashcard and talk about their advantages that they see in the moment. And what you'll find is it'll focus you on your chart reading. And that's what we're going to do. We're going to focus on our chart reading through the high probability trend trade. And this is a trade. 3 rules, guys. Simplicity has always been my focus. Simplicity has always been, I think, the easiest route between being a beginner and being a trader. Is the less you give yourself to think about, the easier you're going to get to where you want to be. There's only 3 rules, and it's like that for a reason, guys, because 3 rules is enough to get you into the highest probability trend trade. Each rule gives you an advantage. I think my personal trading became easier. It became more focused. When every time I spoke to myself in terms of advantages on my chart. Rather than looking for what may be wrong, I was always looking for what was right. I was always seeking out the advantage of momentum through strong triggers. That's rule number 1. I was always making sure that I had a clear path, and I would use the words, I have a clear path. Because there were no termination conditions, none of those likely to stop areas. And then I was capable of pinpointing the entry area. And as I'm identifying my entry area, I'm literally using the words. This is the point. This is the best of the best where the market is most likely to continue. And I begin speaking in terms of advantages, because advantages are what create the trades, guys. And those 3 rules each provide an advantage. And it's the accumulation of the 3. It's like a little algebraic equation. A trade is momentum, a clear path, and an entry area. And just to keep it simple even further, these 3 rules happen on 2 charts. And you will see people in the room trading the market flow chart. You'll see people in this room with higher time frames. You'll see people with charts that you can't even understand sometimes. And it's okay. Everybody's in a different place. When you learn to master simplicity, it becomes easier to expand. When you learn to do it the easy way, it becomes easier to add additional information because your brain can process it. But for the high probability trend trade initially, we're going to keep it very simple and focused. We're going to allow the large chart to lead the way. The large chart really is going to define direction. The large chart is going to define momentum. And the large chart is going to define um, the areas that may be problematic, the areas that may stop the market, the areas that may create a bounce, the areas where people are making decisions. So these three informative pieces come to be on the large chart. And you can do it on the most current bar. It's a broad stroke of a brush, so it really only takes that one bar to give you this information. And when the first two rules are met on the large chart, you will have the advantage of momentum and you'll have the advantage of a clear path. And then you'll turn your attention to the smaller chart, your second chart. And your smaller chart's going to take that large chart, that large one bar event, and it's going to break it down into 15 to 30 bars. It's going to break it down into really a refinement process where you're going to pinpoint the best of the best. You're going to pinpoint where the market is most likely to continue. And that's all the entry chart is. It's an entry chart. It's a small chart. It's a faster chart. But by doing so on a smaller chart, rather than looking for entries on the large chart, you will be able to reduce your risk a lot. You'll also be able to increase your profit potential. And that's where rule number 3 comes into play, guys. Rule number 3 is your rules for entry. So 2 charts, 3 rules, each provide an advantage. It's the 3 advantages that create a trade. And then as always, guys, the fastest way to get to where you want to be is post in the room. Take advantage of the idea that 15 hours every week I'm live, that 15 hours, my sole purpose in this world is to give you feedback on everything that you see and everything that you do. It's part of the demo. It's part of the purchase. It's part of all these things with Nexgen. And so many people choose to ignore it. And I don't know why. I haven't figured that out. But every time you post in the room, it's like a private session. We're going to look at your charts. We're going to talk about what you see. We're going to talk about what you did. We're going to speak about advantages. And ultimately, we're going to try and figure out how to do it better. In order to get the absolute best feedback, tell me why. When I was in college, I was working on an English Lit degree. I had this professor in one of my English classes, and if you wrote on a piece of paper, if you wrote a paper, it's called purple prose in literature. Every time you wrote something, if he thought you were just trying to pad word counts or something, he would write in big red letters, "So what?" Right? I went long. So what? Tell me why. I entered here. So what? Tell me why. And if you get in the habit of all the time being able to defend your actions like you're in court, well, I went long because I had the advantage of momentum, a clear path, and an entry inside of favorable large triggers, then what you're doing is you're beginning to police yourself and you're beginning to embrace the idea that the advantages are the only reason that you enter a trade. So tell me why you did what you did. In the beginning, it may not be because of the rules. It might just be a gut feeling. Tell me that. There are no wrong answers. I won't ridicule you for not following rules. I won't shame you for making mistakes. We'll celebrate victories and we'll learn to iron out the problems that may be happening. But show me where you entered as well, because there are rules for entry that give you the best of the best, give you the highest chance of success, give you the lowest amount of risk, give you the highest profit potential. So maybe we can work together and find a better entry. Maybe it requires a little patience. Maybe it requires a little more aggression. Or maybe you did it perfect and we can just high five. And then show me where you got out, guys. Tell me why. Hey, Mark, this is where I exited. Well, how come? Well, because I was scared. I didn't want to give any money back. That's probably the most common answer for the new user. And we'll start talking about advantages that could have or should have kept you in that trade longer. So give me as much information as you can on every chart, guys. This is how you're going to get the best feedback. And then secondly, use the spreadsheet that Nexgen gave you. John put together an unbelievable spreadsheet that has an area full of client trades and patterns that repeat themselves. It has a section with all of your personal looks as you create recognition and start to build a plan. And then finally, this was actually put together by one of our clients, Miss Mary Rocks. And she created these drop-down menus. And this first page is your trade journal. Every time you take a trade, you're going to drop it in here. And you're going to talk about how you feel, what the conditions were. And it's my opinion that the most important part of this is the notes section, guys, because it encourages you to write down the feedback that you receive on your trade. It has you identifying patterns that are creating success. Like maybe it's the perfect trade. Don't ever miss it. Write that in there because that's what I'm going to tell you. Or maybe I tell you, hey, trade it into a termination condition. And this is not a clear path, and maybe this is creating challenges for you. So you'll begin to recognize patterns in the market that are bringing you success, but you'll also start to recognize the patterns that are pulling it from you. You'll ask yourself, what worked? What didn't work? What made me feel calm? What made me feel on edge, right? But if you do this every morning, pour a cup of coffee or tea, if that's your thing, have a glass of water, protein shake, whatever. But take 5 minutes and look at what you did yesterday and ask yourself, these key questions. What worked? What didn't work? This is what I'm going to focus on today, making sure that I avoid the problems and I'm going to embrace the advantages. And it will accelerate your learning, guys. It'll accelerate the learning dramatically. So we're going to learn the rules for when it's okay to trade. You guys simulate. If there's market action today, simulate. If there's not, that's okay. It's okay to have an off day. We're going to simplify a high probability trend trade, and then we're also going to talk about a medium probability trade. I'm going to teach you guys how to study them. I'm going to give you checklists and a plan for both. And this is it. We're not going to go outside of that. If you're trading outside of those, please put them in the room, and we'll talk about advantages in your trades. But the idea is that you learn the rules so that they become easy. You learn the looks so that they become easy. And the easiest way to do that, guys, is to take these pictures. The easiest way to do that is to begin building a catalog. This is what I'm looking for. This is exactly what it should look like when I'm taking a long trade. And you'll be able to come back and you'll be able to recognize and repeat this look each and every time, because recognition really does come through repetition. So I like to encourage new users, or even if you're not a new user, and you're really focusing, like I'm gonna hammer down this week, 15 annotated pictures a day, 15 pictures that explain advantages, 15 pictures that tell the whys. And if you get in the habit of doing that every day, 15 pictures a day turns into 300 pictures a month and almost 1,000 pictures by the time you get to the end of 90 days with Nexgen, 90 days of study. The simplicity that we give you in the beginning, guys, it's designed to give you a plan that you can follow to begin finding success as you grow with the software. You'll spend your first 10 years with Nexgen learning something new every day. I still learn something new every day, but I have a solid plan that allows me to be successful, to make money while I continue the education process. And that's what this classroom is. This is a class that is going to allow you to find confidence through the memory of success, to be able to understand and take a trade that typically wins 70 to 80% of the time, and really just to train your brain to focus on these advantages. So without further ado, guys, I'm rolling through this, and I'm rolling through it kind of slow today because I am recording this. It is going to be live on YouTube. And I want to make sure that you can go back and you can have the perfect rules-based video. Rule number 1 says that I must have strong triggers. And I know that when rule number 1 is met, the advantage of momentum is present. So this really should lead the way for you. It's rule number 1 for a reason, guys, because there's a couple things that happen. The large chart defines direction. The only way to have strong triggers is if you're trading with the direction. So let this be your first lesson, your easiest lesson, and let this be the one that, celebrate it. Man, I'm so smart. I just learned this in 3 seconds. If the background on your large chart is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long, guys. It really is that simple for the new user. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. And like I said, strong triggers is the beginning. Strong triggers is the first advantage, the best advantage that you can give yourself as a new user. Because strong triggers break areas. Strong triggers push a market in the direction of the trend. And strong triggers will even help cover up some of the mistakes that new users make. So strong triggers means that your small triggers, the solid lines, have broken above and away from the large triggers, your dash lines. It's like scissors that have just opened. They're ready to cut. And that separation, that gap between the two, lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. That's your first advantage. OFM is what you're going to see it annotated on charts. And it's almost like a life cycle. As the small triggers break away, momentum is accelerating, increasing, it's growing. That huge gap lets me know that it is the absolute best of the best. And as they begin to return, that momentum is weakening, it's lessening. And when they finally return and get inside of the large triggers, well, now we have weak triggers. We've gone from strong triggers to weak triggers. We've gone from the advantage of odds favorable momentum to the disadvantage of having triggers that tell me anything can happen up or down. You'll see these annotated ACH on the chart. When I have strong triggers, when you have strong triggers, guys, this is the best of the best. This is the look where it is the most favorable to use that smaller, faster chart to buy Fibonacci support when the market is going up, or to sell Fibonacci resistance when the market is going down. You're going to be able to do that through that refinement process on a smaller, faster chart. But on your large chart, and you're going to be able to use this for study, what you're going to be able to do is you're going to be able to pinpoint on that small chart exactly where these tails are most likely to form, where these wicks are most likely to bottom out and continue up, or top out and continue down. And that's what the refinement process does for you guys. So you're going to use this for a study tool to go back and really study the market, to be able to test this methodology, to make sure that you're capable of recognizing the rules. When you see strong triggers, circle a tail on your large chart. And what you'll find is on a smaller, faster chart, see if we have a market that isn't just stuck consolidating. No, it's a holiday, isn't it? There we go. Crude oil. When I have the best of the best trigger look and I circle this tail on a smaller, faster chart, that's where the entry comes together. So we're going to use this circle method to really understand how to capture on a smaller, faster chart and take advantage of the momentum on a larger chart. And we'll come back and talk about that when we do entries. But 90% of your day is spent reading indicators, guys. 90% is waiting for that advantage. Oops, you know what? Let me give you the strong trigger picture too. I'm going to load the room with pictures today. If we go from left to right here, odds favorable momentum, strong triggers up here on the left-hand side, that market continues down. It goes with the trend, with the direction, with the momentum, and then the triggers weaken. The smalls work their way inside of the large, and anything can happen up or down. And what happens is we get a full reversal. There was probably Fibonacci or support down there, maybe some one-to-ones. But even without the benefit of an area on that chart, you can see that those weakened triggers precede the reversal. From the reversal, the opposing force takes over, provides us odds favorable momentum. You can see the gap, and there's that tail. You guys are pinpointing where the bottom of that tail, the best of the best area where the market is most likely to continue, and it's probably creating opportunities for you to make profits to the upside. Right up until the triggers weaken again, we get another reversal. From the reversal, odds favorable momentum. There's a tail, actually there's a couple, and then it probably smacks directly into an area. And this is where you can see that the market begins to transition. This is where you can see that the advantage of momentum just doesn't take place. The large and the small triggers no longer agree. If they don't agree, I can't have odds favorable momentum. You'll even notice that the small and large triggers disagree with the background at one point. I can't have odds favorable momentum. This is where the buyers and sellers begin to fight. This is where the buyers and sellers, the people that move the market, and those people aren't you, they are battling for supremacy. They're trying to take the advantage away from one another. When there's no agreement in colors, guys, this is a huge red flag. Sit on your hands. just wait for a second. You don't have to jump in the middle of their fight. You don't have to be a hero. You don't have to predict whether it's going up or down. You can really just kind of hang out and wait and say, well, the advantage isn't present, therefore I won't look for a trade. Eventually, someone wins. Eventually, the buyers win or the sellers win. They provide you odds favorable momentum, and you'll start going through that process again of looking for your rules to be met. This picture just reminds you that you're not going to be in a trade every minute of the day. You're not going to be active like you want to be active. You're not going to spend 7 hours in the market every day. You're probably going to spend 70 minutes every 10 hours that you spend in the market. So it's okay to relax a little bit, wait for those advantages. And then once you have them, we'll start looking for the next one, right? Once I have momentum, and just quick reminder, momentum pushes the market in the direction. Momentum can break areas, those key areas that we're looking for in rule number 2. Really strong triggers can break them or create a bounce hard enough to come retest them. So don't forfeit momentum. It's easy to recognize and it's a great advantage. But once you have it, we're going to make sure that we don't have any termination conditions. None of those likely to stop areas. And the areas that we're looking for are going to be red Fibonacci resistance and blue Fibonacci support. And you're going to be able to look for these yellow 1-to-1s. Divergence high lines, that magenta line that prints from a high pivot when there's a loss of momentum, or divergence low lines, that cyan line that prints from a pivot when there's a loss of momentum at a low. And we're going to use these areas because these are the areas where decisions are made. These are the areas where the people that control the market are going to decide to buy more, to sell more, to take profits, to enter, to exit. And the reality is you guys don't ever have to get caught in that decision-making process. You can see the bounces that come off of key areas. You can see the reversals that happen. And even if we go back to the live market, you can see that this market reversed after a giant down push right at a big blue Fibonacci area, almost to the tick. You guys knew about this area, and I'm going to give you the recipe. Look at those weekend triggers. I'm going to give you the recipe to not get caught taking that short into that area. And we're going to do that with a simple order of operations. The first thing that has to happen, it always has to happen, is that price must reach an area. What does that mean? That means that your dynamic Renko bars make their way, in this case, down to support. When they get down to support, all you have to do is ask yourself, where are the trigger lines? If they remain above the area of support, this area of support is behaving as a termination condition. It's an area that may stop the market. If these dynamic Renko bars come up and reach Fibonacci resistance, all you have to do is ask yourself, where are my trigger lines? And if they remain below the area of resistance is a termination condition. You're not going long into this area. And guys, that is the easiest way to recognize a termination condition. So here they are at a high. And I want to talk about the divergence high pivot. When the market goes up and the market goes down and there's a loss of momentum, you're going to see this pink line, this magenta line. Price does not reach that magenta line. Price creates that magenta line. And that's important for the idea of termination conditions. Because in order for this line to behave as a termination condition, price must reach it. So when it comes back and those dynamic Renko bars hit the area, all you guys are doing is asking yourself, where are my trigger lines? If they are below, you have a termination condition. It may reverse the market. It may create an untradeable bounce. And there may just end up being a fight there for the next hour. You just don't know what's going to happen. So no more long trades. That one kept you safe. Even with odds favorable momentum, price reached resistance, all the triggers remain below. That's a textbook termination conditions. You guys don't get caught in that long trade. Price reaches yellow 1-to-1s, resistance, all the triggers remain below. Look at how it pushes all the way down to Fibonacci support, but it never reverses the market. Support does the exact same thing and pushes it back up. But these are termination conditions at a high. Take this picture, study it for a little bit, make sure that you can identify them in the moment, and you'll assure yourself a clear path. Price comes down, reaches these yellow 1-to-1s. I put the box here, but I want you to see it. It reaches them first here with odds favorable momentum. All the triggers remain above. No short trades into that area because the triggers are above. It may bounce, it may fight, it may reverse. You just don't know. In this case, it bounces. It bounces right to Fibonacci resistance, and all the triggers remain below. You know you can't go long, but you can't go short, and it comes back, and it reaches those yellow 1-to-1s again. And the triggers still remain above. And guys, this is your 90% sitting on your hands doing nothing. Ultimately, the buyers take over. They give you odds favorable, and there's your tail. But this area keeps you from taking chances, from taking risks, from really driving your car into a brick wall. Price reaches support even with odds favorable momentum. And look how it bounces when the triggers remain above. And same thing on that divergence low, that pivot stop out. It's a pretty simple recipe for the new user. If price reaches the area and the triggers don't break it, no triggers through, there is no clear path, guys. There is no long trade into that area. That is the let's hold our horses look. When is the path clear? When both the small triggers and the large triggers get to the other side of the area in question. Notice that it is strong triggers that breaks the area. Once the small and large get to the other side of resistance, resistance behaves as support. And you can see with that odds favorable momentum in this picture, you do get one of those tails with a clear path. That becomes an opportunity for you guys to take the long to pinpoint that best of the best. And you'll see it again just in the pictures. Price reaches resistance. None of the triggers get above. Therefore, no long trades. It pulls all the way back to support. All the triggers remain above. No short trades. We're embracing that 90% idea. Price comes all the way back up to two forms of resistance and a divergence high. And look at your trigger lines. Not only are they below, but now they've weakened dramatically. From this termination condition, you get odds favorable momentum. You get a reversal. It's a strong top. It's pushing the market down. This bar has not reached Fibonacci support. My path is clear because I have not reached an area. There's that tail, guys. There's that highest probability trend trade that you can take. It takes a little bit to get comfortable with the look. It takes a little bit to be able to recognize it in the moment. So the easiest way to do it is to take pictures, to go back. Whether it's in crude or the S&P or NASDAQ, it doesn't really matter. But take a picture of it and write something clever on your chart, like the recipe. Price reached 1-to-1s, no triggers through, no short. And if you get in the habit of writing that, taking these pictures, writing it, putting in the termination condition section of your spreadsheet, these become easier to recognize in the moment. And I want you to see this one. This is my favorite picture to share with you guys. Because price is screaming to the downside. Everything says down. The market is fast. The momentum is great. And then it goes head first into these yellow 1-to-1s. And when it does, all of you brilliant people say, hey, you know what? No shorts. All of my triggers have remained above. It's not worth the risk. I'm going to sit on my hands. I'm going to wait and see what the people that control the market are going to do. And they push, the buyers push it all the way up, and all the triggers remain below. So I can't go long into resistance. It's a termination condition. And I can't go short into support. It's a termination condition. And my triggers don't agree. They're both going two different ways. And guys, really, there is this fight between buyers and sellers that lasts for about 35 minutes. This is your 90%, guys. This is your patience piece. The hardest thing you'll ever do as a day trader is absolutely nothing when there is nothing to do. True story. Hardest thing to do is nothing, which is weird. You would think nothing would be easy, right? Pretend you're a teenager and it's Saturday and you're just doing nothing. But eventually, small and large get above resistance and it behaves as support. You do have odds favorable momentum. The path is clear. Everything says up. And there's your tail, guys. There's your 10%. That takes you off to the promised land. Your 10% that sets you up for the highest probability trend trade that you can take. That's the 10%. Whoops, that wasn't even a picture. That's the 10% where Next-gen users have the greatest advantage. I don't know what is open on my chart. There it is right there. And you have to embrace the idea that there won't always be a clear path. And a great way to build trust in it, let's do this. Price reached Fibonacci support, guys. Look at that. No reason to take a short. Creates a full reversal. Gives you odds favorable in a clear path. There's your tail. There's still some strength. The area breaks, but then these weakened triggers hit Fibonacci resistance. And you sit on your hands. And it pushes all the way back to Fibonacci support. And the triggers remain above. And you sit on your hands. And you say to yourself, this is not advantageous. I don't have a clear path. I don't even have momentum. And guys, if you remember the picture from the manual, I want you to see this, because this is what amazes me about what we do. Resistance to support, weaker triggers to resistance. It's almost like it's happening live right in front of us, straight out of the manual. Patterns repeat themselves all the time, so you have to begin to recognize those patterns. Where did it come from? It came from a pivot stop out, from a divergence high with no triggers through, and that is what started the push down. Resistance holds, support holds. There's your tail with odds favorable right in the middle, guys. This is where you guys are going to make your money. This is where it's the easiest to make your money. And if you scroll back, support, trade that didn't work. From support to resistance to support to resistance, and then it finally breaks. So guys, go back and take pictures. Take pictures of termination conditions. Take pictures of a market that doesn't have a clear path. Annotate it. Put the recipe on there so that you can learn to recognize it in real life when the market is moving. Is everybody good with the basic idea? If price reaches an area and no triggers break, it's cool to sit on your hands. There's no reason to hope or to wish or to want, guys. Embrace the idea that you don't have to be first. You don't have to be the last one out. And the recipe's easy. It never changes. I do want to share one more picture with you. And this is the one that introduces you to the first idea of just what strong triggers can do. And strong triggers will show you an area with the potential to break. When you have odds favorable momentum, when the market is screaming to the upside and it's reaching Fibonacci resistance, every one of us in this room says to ourselves, hey, I'm not going to take this trade into it because it may bounce, it may reverse, it may create a fight. If your small triggers just continue on the path and they have odds favorable momentum and everything is screaming to the upside and they smash through the area, but the large triggers remain below, well, you have an area with the potential to break. You have an area that all of that momentum may take you to the other side of. But until both the small and the large areas get to the other side of the area, or small and large triggers get to the other side of the area, guys, this is still a termination condition. This is a 100% potential to break, but not a clear path. And I want you to think of it that way. You've lost the advantage of a clear path. But with all the momentum, the clear path may happen. There will be opportunities on this 50-50 look. 50% of your triggers are through, 50% are not. But because there is not a clear path, because the only thing you have is momentum and hopefully the perfect entry area, it's not high probability. It's not going to be one of those trades that typically wins 70 to 80% of the time. And when you incorporate this into your plan, it's okay if your win percentage drops 10, 15%, because you're not trading with a clear path. You're not giving yourself the best of the best, but I'm going to give you a plan to take this trade and really optimize your chances of success with it. So termination conditions, guys, they are designed to keep you safe. They're designed to keep you patient, and really they create a huge advantage when they reverse the market. But there's one other look that you're going to see. Large chart's a slow chart, right? It is a loaded down semi. It's on the highway. It's difficult to stop. You're not going to see change happen quickly. And sometimes it just kind of turns from nowhere, whether it's from a high or from a low. There's one more termination condition that we can use on the smaller chart, the faster chart, your entry chart. On the large chart, we use lines for problems. We use lines to determine where the market is likely to stop, where there is a chance of reversal or a big fight. On the small chart, we use lines for entry. We use lines to create a bounce point for entry. But we can use divergence on the small chart. We can use that loss of momentum, those 3 divergences at a low, 3 divergences at a high. And we can use that to determine that a market may be reversing. And 3 divergences in the same price range may terminate the trend. It is a termination condition. It's a rule 2 not met termination condition. And it becomes powerful when the small triggers work their way inside of the large triggers. And it becomes more powerful still when your third pivot from a low is higher than the previous, creating what we call a head and shoulders pattern. And your third pivot from a high is actually lower than the previous, creating that same head and shoulders pattern. It just adds strength to the potential termination condition. You're going to see looks like this at a low or looks like this at a high. Whoops, wrong one. When your large chart can't give you that information fast enough. So it's designed once again to keep you safe, to keep you out of a market that's having problems getting the direction that it's going. You're also going to be able to use this look, these 3 divergences. Maybe you're in the perfect trade. Maybe that short had momentum and a clear path, and everything was telling you that your chances of success are huge with this trade. And then your small chart gives you 3 divergences. What it does is it allows you to manage out of that trade, to eliminate the idea that hope is a good plan, and embrace the idea that visually you can see that things are changing. So 3 divergences will be used as a management tool, especially in those medium probability trades, also high probability trades. And it'll also just let you know when it's time to not take that next potential. So large chart led the way so far, guys. Large chart said that we had strong triggers, right? Large chart said that the odds were favorable for it to go up. And then the large chart said that there were no termination conditions present. There was nothing in the way that may reverse the market. Therefore, we had a clear path. Remember, guys, the large chart has just defined direction, momentum, and areas. And it's a broad stroke of a brush, right? It's a slow-moving chart. We've got to refine that chart. We've got to take that one bar, that most current bar, and we are going to whittle it down. I love to say whittle. It brings my Texas out. What happens in this one bar, 15 to 30 bars, we're going to use that to our advantage, guys. We're going to be able to pinpoint where the market is most likely to continue on a smaller, faster chart. It's going to allow you to really reduce your risk, to maximize your profit potential. And rule number 3 is going to get you in at that best of the best spot. Rule number 3 says that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And I want to break down what that means for you. A limit order means that you're literally going to wait for the market to come to you. You're not going to chase price. You're going to know exactly where it's most likely to bounce, and you're going to wait for it. And if it gets there, you'll enter, and if it doesn't, you won't. You're going to use that limit order to buy or sell a pullback. And a pullback is this little shove on a smaller, faster chart that's counter to everything that's going on the large chart. The large chart is the large crowd. They're pushing it up. There's nothing in the way. The direction is up. Like everything says, let's go north. And then there's always this little group of people with just enough money to create turbulence. And this is the small crowd push. This is what we call a retracement, a little pullback counter to the underlying trend. We rely on that pullback because our rule says that we're going to buy or sell a pullback. And we're going to let it happen at areas, which means that I'm going to be looking for blue Fibonacci support or red Fibonacci resistance. I'm going to be looking for a mid band, whether it's green or magenta. And I'm going to be looking for these yellow 1-to-1s. But I'm going to buy or sell a pullback in an area inside of favorable large triggers, guys. And I'm a huge, huge fan of the language of this one. If you begin annotating your chart every time you take an entry, I am entering at the area inside of favorable large triggers. My entry comes from an area inside of favorable large triggers. High probability trend trades originate at lines inside of favorable large triggers. What it's going to do is it's going to keep you patient on the pullback. It's going to keep you waiting for the best of the best. And favorable large triggers means that your large triggers, the dashed lines, and your synthetic triggers, the other dashed lines, they should be one on top of the other. They should be riding piggyback. They should literally be as tight with one another and wide in the angle of the trend as they could possibly be. Because the closer they are overlapping, the smaller your window becomes, the smaller the point where the market is most likely to continue is. And the smaller this area is, the least amount of risk that you're going to have on a trade. And that's really what we want. We want to manage our risk long before we ever manage our profits. We do it by having those advantages. We do it by embracing areas inside of favorable large triggers because we know where the market should bounce. And I'm going to walk through the process of it. And this process that I'm walking through is in the client trade section on the spreadsheet that you guys have. It's right in the upper left-hand corner. And it's going to take us from A to Z, from start to finish. I'll drop my spreadsheet in there just in case you don't have the most current version so that you have this on there. Everything is predicated with the rules met on the large chart. The rules have to be met on the large chart, guys. You have to have strong triggers and a clear path if you want to have that trade that typically wins 70 to 80% of the time. But when it looks like this and the large crowd says short and the large crowd says down, and the large crowd says strong, and the large crowd says clear, you're going to wait for the small crowd, guys. You're going to wait for that smaller, faster chart to give you a reversal bar. And this signals the beginning of a pullback. At the time of this reversal bar, and you're patient, right? You're not jumping in. You're waiting because patterns repeat themselves. At the time of the reversal bar, I want you to identify your favorable large triggers. I want you to draw a box from the top of your triggers to the bottom of your triggers. Not just the large, not just the synthetic. It doesn't matter which one the areas are in, but the tighter that they are on top of one another, the smaller that window becomes. So I'm looking from the top of the triggers to the bottom of the triggers, but this isn't where the market is most likely to continue. High probability trend trades originate at lines, fibs, mid-bands, and yellow 1-to-1s, but they need to be tucked inside of favorable large triggers. So resistance can be red Fibonacci resistance, magenta mid-bands, or yellow 1-to-1s inside of favorable large triggers. Your window is from the closest resistance, the lowest point of resistance, to the furthest resistance, the highest point of resistance, inside of favorable large triggers. Notice that I'm saying that like a broken record. So you've created your window of opportunity. You've created the point where the market is most likely to bounce. Now that limit order comes into play. Now you're going to activate a limit order right at the bottom of that window. Or if it's a long trade, right at the top of that window. And I want to talk about why we do, guys. Because remember, when we're looking for these entries, when we're looking for these areas inside of favorable large triggers, this is the look on your large chart. The momentum is its absolute strongest, and there's nothing in the way. So we're not expecting a huge push, a huge fight against this area. Whoops. Sorry, my ringer was on. I apologize. Hopefully you guys can't hear that super loud. We're getting in at the area closest to price because the large chart said that we had momentum and nothing in the way. And we're not going to stumble over a couple pennies to try and catch some dollars, guys. So your limit order goes just below the lowest point of resistance for a short trader, just above the highest point of support for a long trade. And at this point, there's nothing to do. Sit on your hands and hope that small crowd has it in them. And if they do, if they push you to that limit order, you are in the market. You're in the market with odds favorable momentum. You're in the market with a clear path. And you're in the market having entered where the market is most likely to continue. And guys, this is your entry. This is the best of the best. This is the one that you're going to look for your first 20 days with me, and just get to the point where you can recognize advantages and eventually turn those advantages into an entry. So let's do an entry. And this is such a great example. Let's get our cheater off of here. You guys want to do it together? Guys, great entries create manageable trades. They really do. Let's take a look. And we're going to walk through this the same way that I would walk through it if I were looking for a trade. So I'm going to take my first picture. We're going to do this. We're going to create a sequence together. I'm going to draw an arrow. And guys, I have odds favorable momentum. Give me a Y if you see it, please. Odds favorable momentum, the separation between the two. Everything on this chart says that this is a market that's likely to continue in the direction of the trend. Once I have odds favorable momentum, I look at the most current bar. Price has not, let's do that all caps, has not reached fib resistance. My path is clear. Everybody good with that? I have odds favorable momentum. Price has not reached Fibonacci resistance. My path is clear. And then I want to do it one more time. This is a strong bottom. Why is it a strong bottom? It's okay to type it out. This is a no triggers through termination that reverses the market. Guys, this creates a huge advantage. This is the one that sets me up for the highest probability trend trade that I can take. Whoops. Give me just a little bit more there. So I have a termination that reverses the market. I have odds favorable momentum. I have a clear path. Rules 1 and 2 are met, guys. Now it's time to turn my attention to the smaller, faster chart. And on the smaller, faster chart, this is exactly what I'm doing. It's time to look for an entry. So I'm going to look at triggers, areas, where do they line up? That's it. I'm not taking a trade. I'm not jumping in. I'm not doing anything other than looking to see where they line up. And then just one little extra right here. No worries. Areas defined on large chart. Price is coming from support. The triggers have rolled, right? It creates odds favorable momentum, Rob. And that's rule number 1. So let's put a 1 on it. Price hasn't reached the next area. Rule number 2. So far, so good. And now I'm just looking over here. I'm looking for an area. Everything says up. My triggers are up. My large are up. My synthetic are up. Everything says up. And I'm not worried about this fib because areas are defined on the large chart. So there's our first picture. And then all we have to do is watch that small chart and wait for a reversal bar, guys. And this is the second step. We're creating another sequence here. So I'm going to hit the call out button. And then I am going to wait for a reversal bar on the small chart to signal the start of a pullback. This is the second part of it, guys. So I'm going to wait for the reversal bar. I'm done on the large chart. I'm going to say done here, rules met. There we go. So at the time of the reversal bar, now I know that that pullback is coming. Now I know that the small crowd's doing their thing. So what am I going to do? I'm going to draw a box from the top of my triggers to the bottom of my triggers. So we really don't even need the large chart anymore. And guys, I'm going to put this into the spreadsheet for you. If yellow 1-to-1s, magenta midband, and red fib are entry targets for a down market trend, does it also hold true that a yellow 1-to-1s, green midband? Absolutely. Absolutely, Mike. So red, magenta, signals that they're behaving as resistance. Green, blue, signals that they're behaving as support. Great question, man. That is perfect. So at the time of the reversal bar, and this is why we break this down slow, guys, so that you can do this when the market's moving. At time of the reversal bar, I am looking from the top of my favorable large triggers to the bottom. And this defines where I will look for areas. So I'm going to draw this in here, and I'm going to literally draw the arrows from the top line right to the bottom line. And this is where we're going to look for areas. So there's the next step. Let's drop that one down. And all this happens right on the reversal bar, guys. And now I'm going to take that shape, and you'll notice that it's a little bit smaller here. And we're going to define it, and we're going to put words with it. My window of opportunity. Everybody do the Ric Flair. Woo! Extends from the highest support to the lowest support. Here's the key. Inside of favorable large triggers. So what I've done is, this is where the market is most likely to continue. So what I've done is I've broken it down, guys, not the top of the triggers to the bottom of the triggers, but from that highest point of support to the lowest point of support. This is where the market is most likely to continue. This is my window of opportunity. Is everybody good with that? We're going slower through it because great entries, guys. Great entries are manageable trades. There's your window. Your window of opportunity extends from the mid band, the highest point of support, to the yellow 1-to-1s, the lowest point of support. And then let's just do a little reminder here. These 1-to-1s way off in the distance, not in the window. So once all of this happens, my job, let's see where the market is. Order pending. Oh, it worked out. Awesome. Hopefully it doesn't fill me. If it does, it's okay. It's sim. But let me go back and close that order while we go through it. Order canceled. Once you identify the window of opportunity, I love that I could do this with an actual limit order. Right click on chart, activate a limit order, a tick or two above the highest point of support. Wait, hope, wish, and pray the small crowd gets there. Nothing else you can do. And guys, that's it. This is your entry for the highest probability trend trade. This is your entry for the best of the best. And then I want you to see, because this was a good one. Is everybody good with this? I'm going to put these pictures into the spreadsheet for you. I think that another entry sequence is good. Or if you want, I can drop it in the room, but watch this. Large chart says go. Looking for triggers, looking for areas. Wait for the reversal bar. Identify your triggers. Create your window of opportunity. Drop that limit order in there. And I want you to see what happens in the market, guys. It doesn't make it. It didn't make it to that best of the best area. This is where a lot of you were going to be tempted. Man, I didn't get my entry. I knew I should have put it someplace else. I'm going to jump into the market at 71 because this is my money and they owe me everything, right? And then sure enough, We trade patterns, guys. We trade things that happen every day, every market. And look what happens. They come back for you. They go, oh shit, we forgot Rob. And they come back and they get you. And everyone that jumped in up here got stopped out to the area inside of favorable large triggers. Does that make sense? It takes a level of patience sometimes. You have to wait for the best entry, guys. Don't chase trades. Don't force it. But the cool thing is if you know where the market should go, right? You know where it should continue. It's easy to say, well, the market shouldn't go outside of that window of opportunity. And what it does is it allows you to manage. And then once it begins moving, you can reduce your risk even further. And with all that momentum, guys, look what the market does. It cranks all the way up to that key Fibonacci area. And then just one more. If I circled the tail on the large chart, guys, this is how you're going to study. If I circle the tail on the large chart after the fact historically, look how it lines up with the bottom of the move right there at Fibonacci, or right there at 1-to-1s. I'm sorry, mid-band inside of favorable large triggers. I can scroll back and circle the tail. If I circle the tail and it pulls back to support inside of favorable large triggers, well, then I know I have the rules met for a high probability trend trade. Guys, this is your study tool. At the end of the day, if you think you missed a trade, go back and study it. Circle a tail if you have a tail. Look at this. Resistance to support. Triggers don't follow. It closes the gap. Back into resistance with weak triggers. 1, 2, 3 divergences in the same price range. Everything we do is patterns, ladies and gentlemen. Everything we do are patterns that repeat themselves daily. I'm going to go back. We saw this as it was setting up. This is the S&P. No, this is crude oil from 2021. This is crude oil from today. Is it just me or is it the same look? And if you begin to understand patterns and recognize patterns, it creates an advantage. It creates a huge advantage for you. Is everybody good with the entry? I like doing it bar by bar like that. I like doing a little step by step. I think it keeps you focused, that there is a process, and you do need to learn the process, but the process is easy to study historically. And the more you study it historically, the more you look at it when there's nothing moving, the easier it becomes to catch it when the market is moving. Guys, everything happened. Let's talk stops. Large chart said go, clear path. Odds favorable, reversal bar, pulls back to the area inside of favorable large triggers, and every one of you is in a long trade. If you know where the market's likely to continue, well, then you also understand where the market shouldn't go. This is where your stops go, guys. Your stops go where the market shouldn't go. So often I see people, they'll enter at the mid-band, which is right there at about 21, and they'll say, well, I'm only willing to risk 10 ticks, Mark, which puts their stop just above support inside of favorable large triggers, which puts their stop right where the market is likely to go. And I see this a lot, and I used to do this myself. Because we can identify the best chance of a bounce, we can put our stop outside of that area, outside of that window of opportunity, 4 or 5 ticks, right where the market shouldn't go. And then the cool thing is if it goes through and it hits this, you're going to take a loser. And losers are a normal part of the positive equity curve. But if you learn to take the best of the best entry, if you never forfeit those 3 advantages, momentum, a clear path, and the area where it's most likely to continue, well, then this becomes a trade where 70-80% of the time, it's profit target reached, guys. And once that reversal bar prints, you're going to reduce your risk even further. And this is your high probability trend trade, guys. This is what I want you guys to focus on for your first 20 days with me, first 20 trading days with me. Learn how to get into the market where it's most likely to continue. Great entries reduce risk. Great entries produce the highest profit potential. Great entries are your focus for 20 days. So go back and circle tails. Go back and circle tails and ask yourself, did I have odds favorable momentum? Did I have a clear path? Guys, this is the NASDAQ. Say hello to holiday trading. Termination to a mid band with a large triggers a full bar away. That's a termination. Into a termination. Right to a termination. Directly to a termination. Fighting to a termination. Pivot stop out termination. Nothing says up. Mid band divergence. Right into the termination. 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 Guys, this is where people predict. This is where people hope, wish, want. And if you're a NASDAQ trader, unless you are so in tune with that market, you're just giving money away today. But if you waited for the termination, full reversal, odds favorable, and you were a night owl, you might have caught one before the market went crazy at 3:30 in the morning. Let's go look. Let's see what, oh, and there was one right in the middle as well. Let's see what these look like. We'll take this one. Totally clear path. Odds favorable momentum. 90% of what you do during the day is waiting. 10% is a pullback to a mid-band right inside of favorable large triggers, giving you the highest chance of success all the way down to Fibonacci support. Guys, I can't make this up. It happens every day. You just have to learn to be patient. You have to wait for the best of the best. And then once you do, things just have a way of working out. It's pretty cool. Are there any questions about the high probability trend trade, guys? Are there any questions about momentum? Are there any questions about a clear path? Are there any questions about finding the best of the best entry, that point inside of favorable large triggers? Guys, here's your entry sequence again. That's for the short trade. And then I just built the one for the long trade. So let me put that into the spreadsheet. I'm going to put all 5 pictures. And you know what? I'm not going to do that right now. I'll do it this afternoon. And that'll be available for you. But I'm going to take 5 minutes. I'm going to go stretch my legs, guys. Do the same. We're not missing anything in the market right now. It's a super slow day. And now that the rules are done, guys, now that we've talked about the rules, when I come back, I'm going to give you a checklist. I'm going to give you a trading plan for the new users. And then I'm going to rely on you guys to start asking some questions. If we don't get a bunch of questions, if we don't get pictures or anything like that, then we're just going to call it a day today. Because really, there's not a lot going on. But I wanted to be here in case you guys needed me. So I'll be back in 5 minutes. Go stretch your legs. Go get a cookie, Gary. And smile lots, guys. See you in a second. All right, guys, let's get back at it. Let's take this picture again. And then let's take this picture just for grins. So the one thing that I posted in the room this morning, guys, is I defined pattern, right? Why did I do that? Because once you begin to learn patterns, even 3 years apart, it's not the exact same look, but doesn't that look pretty similar? Everything is green and it hits resistance. It comes back, checks up on support. Large triggers don't follow. It closes the gap. Hits resistance with weak triggers. And that precedes the reversal. This, in my opinion, is one of the most amazing things about what we do, guys, is all these patterns repeat themselves. All these patterns happen day in and day out. They happen on every market. They happen on almost every time frame, whether it is stocks or options or futures, or it doesn't matter. The market doesn't know what it is. Crude oil does not know that it's crude oil, but crude oil repeats the patterns. It behaves the way it typically behaves. Guys, this is the NASDAQ. I can't go short into support, right? Thank goodness I didn't. I can't go long into resistance. Thank goodness I didn't. Can't go long, can't go short, guys. Financial suicide is the recipe for today, it looks like. So I'm going to see what's going on, Cav. I think you posted a picture. I think you may be the only one that posted a picture. So this will be a quick review. And Cav, well, there's the one we talked about, right? Pull back from second divergence into the large triggers and small triggers on the 5-1 chart. Was looking for profit just before the red fib. Got lucky and reached your first and second target. Market was coming from a good bottom on the 34.5. You're confusing your charts, Cav. That was just the 13.2, right? But didn't we talk about it? Termination, full reversal, odds favorable. Cav, it's a great trade. The only thing that I would ask is why didn't you get in at support inside of favorable large triggers? What caused you to hesitate? Or maybe you just weren't in front of it. You might have been watching NASDAQ hoping that it would break out of an area. But guys, do you see how even when he doesn't take the best entry, everything says up, he still has time to make money with all the momentum leading the way. Nice job, Cav. All right, Adriana. So, Adriana, help me out here. I don't know. I bugged your friend Cindy into submission. I'm going to do the same to you. So when you took the trade, did you have odds favorable momentum? Let's start with number one. What do you think, Miss Adriana? No? Okay. Not a deal breaker though, right? Because good things can still happen, medium probability. So let's do this one. Rule number 2. No termination conditions present. What do you think? Did you have a clear path? Price reached Fibonacci resistance, not one trigger line broke through it. Not so much, right? So there's a second no. That's okay. So not sure. Okay, that's what I need to hear. And this is why annotating your charts is so important. So Adriana, do you see the red Fibonacci resistance? Yes. Do you see how all of your triggers are beneath it? That is a textbook termination. That means, especially without momentum, not only do you not have momentum, you're running directly into a brick wall of resistance. And look at this, Adriana, the same lesson that I give every morning. Don't go long, don't go long, don't go long, is exactly what you went long into. And when we talk about favorable large triggers, so let's go through one more. I do like that you wrote mid-band inside a large. So you did get your entry rule, but you skipped the large chart. Favorable large triggers, the best of the best, the absolutely, I'm so excited about these large triggers look, is when they are both wide and strong in the direction of the area, and really crank into the upside. And what you've got is, see how those are flat and lifeless and they're not overlapping? One of the things that flat lifeless triggers tells us is that there's just not any momentum, because momentum requires them to be wide and angled in the direction of the trend. And I think what this was is you were hoping it would go up because the triggers were green, but you didn't have momentum, you didn't have you didn't have a clear path, and you really didn't even have favorable large triggers. And this is one of the ones where I want you to be able to police yourself a little bit. So let me put synthetics flat, no momentum here, not favorable. I love that you took the trade, and I love even more that you were willing to post the picture. And I hope you didn't lose a lot of money on it, because we know that it went down, right? But do you see how if you go through this very basic process, here's what I'm looking for, these are the advantages, and it's okay to not have one every now and then, because it just creates a medium. You got out. Is there another picture on there? Is there a second picture in the post? You made $110? That's awesome. I'm glad that you did. More often than not, with this look, it's going to run you over and take all your money. It's going to take all 360 right out of your account. So we're looking for statistical advantages. And I get that a lot. People are like, yeah, but I made $110. That's awesome. Take your trades. You take your trades. My job is to point out when there's so much going against you that it's so low probability, you have to determine whether or not it's worth risking your money on. I can't make that decision for you. All I can do is talk about advantages. So awesome job. Thank you for posting. And then Miss Cindy. Yellow boxes. So good top, termination creates a full reversal, gives the odds favorable, smaller through, larger not. No divergence, perfect entry, easy money. And then you didn't show me this one, Miss Cindy. But what was the challenge with this one that didn't work? What do you think? You had momentum, without a doubt. It was coming from resistance. I love that. Did you notice 1, 2, 3, 4 areas and all the triggers remained above? And guys, this is a good lesson, and I'm not ever picking on you. And if this hurts your feelings, I guess tape up play hurt a little bit. But Miss Adriana, do you see how the terminations, and I know you said you made 110, but more often than not, that's the result trading into them. So much so that John Novak wrote a book about it. How to Commit Financial Suicide in One Easy Step. Trading against strong triggers, trading into termination conditions. Guys, these are the two absolute biggest challenges that new users face. And if you learn to weed those out, your chances of success go up dramatically. But Miss Cindy, I love the short. It is. No, it's a lot to consider. And that's why we talk about it. That's all it is why we talk about it. My biggest challenge, Adriana, and I don't mind sharing my path. My biggest challenge, and I'm going to show you, is I would go long right here into the termination condition. And when it didn't work, I would go long again somewhere over here. because I believe that it should go up because of that. And termination conditions were my biggest challenge. So I like to be able to point them out. And I never tell people, don't take a trade, right? Don't take a trade because of this. Don't take a trade because of that. But what happens, and you'll find this to be true, the more you have the software, is when every time you look at your charts and it's time to take a trade, if you start talking to yourself, these were the advantages. These were the advantages and these were the disadvantages, and let me go through and make the decision that it's time to take it or not. So that's the only reason I do it. That's why I talk about it the way I do. My goal is that you guys can just read charts. And then Josh, termination, full reversal, odds favorable, no divergence, perfect entry, money, money. So now Josh and Cindy are on the same wavelength. Beautiful trades, guys. And it fits the rules 100%. That's the cool thing, and we're going to get back to that. I skipped giving you guys the plan. Guys, that is the perfect 50-50 trade. That is the perfect potential to break trade. Everything about it screams optimal chances for success, and you guys both nailed it very well. Nice job. And then Cav, same. Termination, full reversal. You get in a little early. And yours gotcha. And I think that the best trade, Cav, and this is a pretty good lesson, and you may have been watching another chart, and I know that you watch other charts. No divergence, easy. Divergence prints, you're in low. But divergence kills 50-50s, guys. And what a great segue to what we're about to talk about. But divergence kills 50-50s. It is the biggest 50-50 trade killer out there. I'm going to give you guys... Yeah. Oh, absolutely. Did you see it? I find in my own personal trading in the beginning, I would miss that one. I'm like, oh, that was perfect. And then I look at this one, I'm like, ooh, I wish I just would have been in there. And everything happens faster the more you see it. But Dwight, you're absolutely right. Look at that. The S&P can't pick a direction, right? You guys know it. Your rules aren't met. There's no reason to get caught. Crude oil, 50-50 with divergence, on its way back up. NASDAQ, it's been absolutely befuddled, will be the word. Being able to not take trades, when the rules aren't met is such a skill set, guys. And just a heads up for you guys that are relatively new, it's harder to do nothing than it is to do something, if that makes sense. It's harder to sit on your hands and do nothing than it will ever be to pull the trigger and take the wrong trade. And I don't know why that is. Human nature, something like that. So let's keep getting into that policing ourselves, right? Let's keep focusing on advantages. Let's keep focusing on the best of the best, guys. Here's your checklist. This is designed to get you into the market. That's all it's designed for, is to get you into the market on the high probability trend trade. It reminds you of the advantages. I say advantages a lot because it's really the cornerstone of what we do. If you print this out, if you put it on your desk and you start talking to yourself in terms of advantages every time you look at your charts, you're really going to be able to focus on whether or not it's time to take that trade or not. Is it coming from a good top or bottom? And if it is, that creates an advantage. If it's not, you can use those 3 divergences to manage. Do you have odds favorable? Do you have no terminations? Was there an area inside of favorable or triggers? The goal for you is to be able to look at your chart and answer these questions almost instantaneously. And you'll find that after a little bit of study, it literally happens in about 4 or 5 seconds. You'll know whether or not you have a high probability trend trade. To help cement the looks, here's another checklist that has all the pictures. What is a termination that creates a full reversal? It's the same one from class. No triggers through, reverses, off it goes. Odds favorable, anything can happen. No clear path, total clear path, potential for a clear path, and then the window of opportunity, getting in at the correct spot. And I'm going to pause for a second. And Cav, you're absolutely right. Thank you for posting that. And one of the things I love about this community so much, it's important that we all see that each other's are learning. For me, it made me feel better knowing that I wasn't the only person that made the occasional mistake, right? And I get excited for your successes, and I hope you guys get excited for each other's successes, because as long as you're in this class, you're going to see people grow and you're going to see yourself grow. But we're always hardest on ourselves. We're always hardest on ourselves, and when we make mistakes, we don't notice the victories, but the people around you will. And it's pretty cool. Be okay celebrating somebody else's victory too, because it will turn into yours. Cav, thank you for posting that. So guys, there's two checklists. One that visually gives you what you're looking for. One that verbally describes the advantages being in place. So print one out, put it on your desktop, start speaking in terms of these advantages. This is what you're going to type on your chart, hopefully, when your rules are met. And then finally, I'm going to give you guys the KISS plan, the Keep It Simple Sunshine plan. This is a plan that is designed to optimize your chances of success with the 50-50, that medium probability trade, and of course with the high probability trade, putting that one in there with the best of the best entries. And guys, this is only a stepping stone. This isn't the end of the road for you. The more comfortable you become with your chart reading, the quicker you're going to get to more trades if that's what you want. But I'm going to put this one in here before we get into it. I wrote this one day because someone was having troubles because they couldn't do what other people were doing. They couldn't take the trades that my more experienced traders were taking, and they were frustrated. They wanted to be at the finish line before they ever ran the race. So the key is having a foundation, guys, understanding the basics, and then each way compounding it a bit. So for the new users, I do blanket with very conservative rules. That's what the KISS plan is. The recognition of advantages and a solid plan that optimizes the chances of success as you learn to read the indicators. So for new users, all terminations are bad, right? No momentum is bad. Areas beyond the large triggers for entry are bad. They're blanket rules because they increase the likelihood of success, and that's what creates confidence. But they're not always bad. But until you have the experience to know when to use exceptions, it's just safer that way. And that's what the KISS plan is. And then just like anything, the more time you spend with it, the more you'll see it. So I wanted to share that because that's what this is. This is getting you focused on the best of the best. Rock, I got you in 2 minutes. It starts with simulation study, class feedback, and continuous practice. Guys, don't forfeit all the advantages of being able to participate in this class. You'll create a plan that works for you based on your experience. Your first trade is the high probability trend trade. Never fight the large short direction or triggers. It rarely works out. It'll eliminate 60 to 70% of the mistakes that the typical new user makes. Focus on your entry. Define your entry. Master your entry. Because great entries create manageable trades, guys. Great entries reduce risk. Great entries allow you to get the most out of a trade because you've waited for the pullback to the best of the best spot. So the same way it's mechanical to get in, let it be mechanical getting out while you're learning to read your indicators. Everything starts with an entry inside of favorable large triggers. It's either going to go to your stop, which is outside of the window, right? That's one option, and that's a normal part of trading. Or it's going to give you a reversal bar, and if it gives you a reversal bar, you're going to reduce your risk 2 ticks above it or below it if it's a long. And it's really pragmatic, if-then. If I take the perfect entry, then my stop goes where the market shouldn't. If it gives me a reversal bar, then I'll reduce my risk. And if it hits my first target, I'm going to pocket $100 and go break even. And that's going to give me the trust and the peace of mind to let it try to get to the second area. And if it gets to my second target, well, then I just made $300, guys. Everything is if-then. If it does this, then it does that. If it goes there, then I do this. And it's very mechanical and pragmatic. And it's pretty good for eliminating emotion for the average new trader. And it's focused on getting you paid. And that's what really creates the confidence and keeps you in the game. So let it be easy. Let it be focused. Let it be checklist based in the beginning. And then the same rules for the 50-50 trade, guys, when it has the potential to break. I'm not going to go over the whole thing right now, but I want you to see something. No divergence, divergence, no trade. If divergence, prints exit trade. That's a little hint as to what kills 50-50 trades more than anything else in this world. So take the KISS plan, guys. You don't have to use it. You don't have to take high probability trades. You really don't have to do anything that you don't want to do. I'll never force you. But I did just hand you the plan that gives you the best chance of success. Embrace it if you like, if you wish. And then Farak, let's see what you got, man. Great top at the 1-to-1s and divergence. So it's a pivot stop out and it hit the 1-to-1s, right, Farak? And you're asking, can I trade at this location knowing that the large trigger isn't crossed down yet? Long or short? Do you want to go up with the color and the triggers? Or do you want to go short against everything? You want to go short? I mean, there is no we, Farak. Can you go short? You can if you want. Let's just go through and let's look at different things. It's definitely a great top, right? I think you nailed that. The 1-to-1s, pivot stop out, no triggers through. Everything looks good, right? Direction is up. Smalls are potentially breaking above the large. You don't know. But you do have determination. You get a divergence, but it's not really from an area. Large are up. Synthetic are up. You've traded directly into 1-to-1s. But the small triggers are down. I'm just talking through it. Can I go short? So this second divergence, Farak, was true right about there on the other side of the 1-to-1s. You can do anything you want, but what you're doing is you're putting a lot of faith in that pivot stop out and fighting direction on both charts and fighting triggers on both charts. And you're even fighting an area on your small chart. So you could go short without really any advantages. But I think what you'll find, and call me crazy, is when the market is moving into an area pretty good, even if it's a termination, and the triggers are still strong or strong-ish, it becomes difficult to fight that. It really does. And being first isn't always advantageous. But one thing that you can do, Farak, do you use a market flow chart yet? No? So eventually, and let me state real quick, your chart reading is good. You're recognizing the terminations and you're beginning to question, and that's how plans are built. And then I'm with Cav. I've lost more of those than I've won. For me, it's a low probability because everything says up, right? Everything says up. And what happens, and guys, correct me if I'm wrong, you came back to this after the fact, right? You came back to it when the market was already here and you took your picture and you said, oh my gosh, look how far it went down. There's got to be a trade there. I know because I was the king of doing that. There had to be something there. That had to be my money somehow. But I always go back to, and I try to keep it simple and talk about advantages, disadvantages. Well, his path was clear to the downside, but everything set up. I'm going to give you the short answer, Farak, because I'm talking in circles. So check this out. Termination, beautiful. Strong triggers, beautiful. What if, just hypothetically, you let your price get to the other side of these one-to-ones and pull back to them to look for an entry rather than trading directly into them? Does that make sense? That would be a first shot momentum style entry. And if I go to HVA momentum trades, I'm going to show you what you've just identified. And it's kind of this one right here. You get that termination condition and things haven't changed yet, but you let it kind of break and pull back. You let it get a little bit into the move before you commit to go in the other direction. And that's a better look. You get the termination and it's coming off of it. See how you let it break and pull back, Farak? I think that's the key to this trade. And what you did is just a little premature. It's got a little more hope in it than I think that you would want to commit your hard-earned money to. And then I want to show you one more picture that I have. And it kind of illustrates it a little bit. And thank you for posting this picture because this is an awesome conversation. It's the difference between hoping and has, right? Hope versus has is actually the name of this picture. Or might versus has. When you're seeing these termination conditions and you're thinking to yourself, man, we're getting close. We're almost there. It's going to be good. I love terminations. When they reverse the market, things are great. What you'll find is if you let at least the small chart momentum subside a little bit, even on a 5-1, it doesn't have to be a range chart. Yeah, but if you let those small triggers get below the large triggers, you let that little trend change happen, it really does create an easier path, I think. But you're on the path to something great with that one. You really are, because you're recognizing terminations, right? And you're giving yourself the best chance of success, and there's a potential opportunity there. And that's it right there. But with all that momentum, it's short-lived. And I think that's what you see more often than not on these. I want to see what happened on that great bottom on crude oil. Let's see what the small chart did down there. It looks like it was a pretty quick reaction. It didn't really give an opportunity down there, did it? I was hoping that we might have seen something like that off of it. Let's look up top. And this is how I build plans for Rock, and I think this is how you'll build plans, is pivot stop out at resistance, weak triggers. Oh my gosh, that's that same pattern again, guys. And this one doesn't have a clear path, so if we're coming over off of this one, off the second, see how it breaks and pulls back? Oh, Farak, we just found your trade, my friend. So check that one out. The large are still up. The smalls have just rolled, but it's a beautiful termination. Everything rolls on the small chart. It breaks the area a little bit and then pulls back. And look how the two before it dance. I think this is a pretty good example. Let it break and pull back to the area. Yeah. So scroll back and find these. No divergence is a big part of that momentum trade. A great termination, like you pointed out, is a big part of that momentum trade. I really think that what you're doing is you're starting to tiptoe through some really great stuff. Look at this one, guys. This was in the middle of the night. Resistance, support, resistance, reversal. And it pushes it all the way down to support and all the way up to resistance, support, resistance, reversal. And now they're indecisive. That's the same pattern, isn't it? Isn't that awesome? Am I the only one that thinks that's awesome? Maybe it is. Maybe I get giddy about weird stuff. I think it's unbelievable to be able to recognize a pattern in the market and understand advantages that may come from it. No triggers through resistance, but the momentum's growing. And we're coming from a termination that creates the full reversal, guys. Isn't it worth waiting? Let's just see if they can break it. They've been consolidating for the last 2.5 hours. Should we let them break before we commit, or should we try to be first? That's up to you. Only you can answer that question. Let it break. I agree. I am personally not even turning on my live accounts today. Market closes at, I think, noon, 1 o'clock. It's light. It's a bank holiday. We can watch it, but I mean, I didn't even turn on my Apex account today. Didn't even think about it. Never took it off of global simulation mode. It's just not worth it to me. I've done it. I've traded holiday days in the past and gotten absolutely chewed up in consolidation because I tried so hard to make something happen, and just I wasn't able to. It turns out I'm not in control. And Cav says if it goes, his next fib's up here at 1703. Cav, are you saying that you knew about a key area above you to help you make decisions in the event that your rules are met, where the market is likely to go? Just got to break it, man. That's it. It's pretty neat stuff. Guys, what do you want to talk about? I don't have any rules met on NASDAQ. Not yet. I don't have any rules met on the S&P. Look at that. Smalls are down, large are down, direction is up. And then on crude, termination, full reversal. That one didn't work. Pushes all the way back up. Triggers can't break, and now it's trying to go down, but my trigger lines look wonky. And then Cav, if it doesn't go, if the sellers win, where's it going? If that 1-to-1 and divergence high does its job, we got a big blue fib down here, right? And I did that because I wanted to illustrate. It could go there, or it could go here. And right now, this price, this range, is a very definitive line in the sand. This is where we're going to see whether or not the sellers want it to go down or whether or not the buyers are going to rally to push it up. This is a very definitive line in the sand. The cool thing is I don't know. I don't know who's going to win. Let's see. Will NQ go up? It says I may rely on it. What if I ask it again? Without a doubt? If I ask it again. Ooh, now the outlook. Not even the magic 8 ball knows. Concentrate and ask again. Read your indicators and ask again. Oh, magic 8 ball, my indicators say termination condition. I do have momentum. Things are pushing up, but I sure do like a clear path. We'll see who wins. Is everybody off work today? To the tick. It hit that pink line to the tick. I wonder if somebody knows about it. We'll see what happens. It didn't reverse anything, but you notice that that's where the fluctuation started. That's where all those up bars started dancing, was right at that pink line. Somebody knows about it. Small triggers aren't through it. Large triggers are definitely not through it. Ramble, ramble, ramble. Be interesting to see what happens. I wonder if it's possible to look at the market and not be in a trade. We're going to find out. All right, guys, I'm going to take 5 minutes. When I come back, if on your 34.5 chart, your price didn't reach the pink divergence, then one of us probably has a data problem. Where's your divergence eye? Will you show me a picture? Did it reach the one-to-ones? We may be different days back or something. We may have a data. Of course, this is NinjaTrader 7, and I didn't clear it out today, so I may have tick problems. True story. Trade your charts for sure. Yeah, didn't get there. That's weird. Do you have the same pivot though? Do you have the same pivot at 8:15? Just no divergence on it? It looks like you have that one. That's the one that's registering on your chart that kept going. But mine created a new one. So weird. I'll reload historical data. We'll see if it changes it. Guys, I'm going to take 5 minutes. So when I come back, here, this is going to be the plan. That's odd. When I come back, the plan is going to be we're either going to have a bunch of questions or we're just going to go enjoy the holiday. It's going to be one or the other. I'm comfortable with either. So if you have a question, guys, this is your window of opportunity. Post it in the room, post a picture, ask it. My NASDAQ is reloading right now. I refreshed my historical data to see if Cav and I can get on the same page. We may not. I don't know, because I didn't clean anything out. I haven't done anything. I may have a discrepancy in there. Mic silence for about 5. No, I got the same. I'll be back in a minute. All right, so far it's momentum for the win, huh? Termination, full reversal, odds favorable. I've got one-to-ones in a divergence high. My small triggers have smashed through, but my large triggers have remained below, which means the area is not broken, guys. Which means that I don't have a clear path, which means that if I am in the market for looking for a potential opportunity, it is not a high probability trend trade. So I have to start asking myself, if I get a pullback, do I have areas inside of favorable large triggers? Well, I certainly do. Tiny little window of opportunity. Do I have strong triggers? Well, I really do, and that's a great thing. What's the one thing, if I'm following the KISS plan, that may affect this trade? It's divergence. My rules say no divergence on the 5-1. So I'm kind of eagerly waiting. If I get a pullback and divergence prints, well, then I may not take it. Guys, one thing you'll notice when the market consolidates like this, when areas hold so aggressively, is that 50-50s are either squashed immediately or run forever. You have to determine whether or not you're willing to take that risk. I can't tell you. All I can do is look at my checklist and ask myself what my rules say, because my rules are designed to optimize my chances of success. So we'll see what happens. Mid-band, everything says down. Resistance, everything's below. Synthetics down, larger up. Indecision everywhere on the S&P. Even crude oil is doing the dance, guys. Market closes in an hour, I believe. So I guess we'll watch the NASDAQ. I'm going to mute my microphone. If you're one of my YouTube followers for the daily stuff, this is me signing off on YouTube. I'll post the link for the first couple hours, but there's not enough going on to keep this thing going. So I'm going to shut it down.